Hi there, welcome to Kneppy Invest. Every single day, I look out for announcements from companies, particularly earnings or tradings updates, profit upgrades, profit downgrades, and that sort of thing. And I found over time that the most violent sort of reaction from the market is when a company releases an earnings or profit upgrade or downgrade that is a little bit surprising to the market. And you can see the share price of a company increase or decrease by a significant amount, particularly on the downside. And this has happened to the Star Casino, or actually it's called the Star Entertainment Group. They did release an earnings update and outlook on February 13, and the share price fell 33% over the next two trading days. Now, to be honest with you, I am not the sort of investor who actually takes positions in casinos. For some reason or other, I don't know why, I just don't like the casinos as investment quality sort of companies. But because of this reaction from the market, I have decided to take a closer look at the Star Entertainment Group just to see if the market is overreacting. And there actually are quite a few casinos on the ASX, in one less now because Crown has delisted, I believe, has been bought out. Now, the Star is probably the biggest one that owns casinos in Sydney, in Gold Coast, and they're building a pretty big one right now in Brisbane that should be opened up late in 2023. It's taking over from the old Treasury Casino, and that is like a $2 billion complex, and it should be pretty fancy, particularly compared to the previous one. There's also a few really small casinos on the ASX. There's one called Aquinas or something like that that owns the Canberra Casino, one called Reef Trust that owns the Cairns Casino, and also one company called Donaco, which owns a casino in Vietnam, Cambodia, someplace like that. But let's get into this video and try to understand why the market has completely punished the Star Entertainment Group, share price falling 33% on the back of an earnings update and outlook. And I think the reason the market has punished the Star is because of the outlook section. So let's get into why the market has punished the Star Entertainment Group. The Star released this earnings update and outlook on the 13th of February, my mum's birthday, and the share price fell 21% on that day. The next day, this negative sentiment continued and the share price fell another 13.5% on massive volume. That's the other thing to take into account here. It was really high volume. So 69 million shares traded the first day, 67 million shares traded the next day. And you don't know if that's high or low volume until you compare it to what you usually see, the volume you usually see with Star, and that is really high volume. So why has the market reacted negatively? There was an article in the Sydney Morning Herald, and just the title of this article should give some clue, some hints to why the market has punished the company. Star Entertainment fights for financial future after dire outlook. So really, this negative reaction from the market, it's not really around the earnings update, it's really around the outlook. So let's get into the announcement to take a closer look to why the market has punished the Star Entertainment Group. First, we'll have a look at the earnings update. And when you look at the first half financial year 23 revenue, you might think things are going along pretty well. The Star Gold Coast revenue up 30% on pre-COVID levels. Treasury Brisbane revenue up 9% on pre-COVID levels, with record performance across slots, main gaming, floor tables, and hospitality. So when they open up the new casino, more than likely they're going to see massive revenue increases because that new complex is quite impressive. The Star Sydney revenue down 13.5%. I think a lot of that might be on increased competition, because they do mention some of the reasons that has affected trading has been operating restrictions following the Bell Review, amendments to the New South Wales Casino Control Act. They've also mentioned, because of some of these restrictions and amendments to the Act, that some of these high rollers have been coming to the casinos, and that increased competition with that Crown Casino opening up in Sydney, I think it was in August. They also said, subject to completion of the review process, they expect underlying EBITDA to be between 195 to 205 million in the first half of financial year 23. And they also gave a bit of an outlook to the rest of the financial year, and they expect underlying EBITDA to be between 330 and 360 million, and that includes remediation costs of 35 to 45 million, and of which approximately 50% is expected to be occurring from financial year 24. So when you look at these earnings outlooks, these numbers, I didn't really see anything that would be probably a reason why the market has reacted so negatively to this particular announcement. It's not until we get to the next section that we get a clear understanding why the market has decreased the valuation of this company by about 33% in 2 trading days. And it's on this section, the New South Wales casino duty rates, where they mentioned that the New South Wales government and the Star are in discussions on the implementation of the proposed changes to the casino duty rates. And they've mentioned here, and I've bolded here, the very important comments within their commentary. So if implemented in the current form, the proposed duty rate increases would have a significant adverse impact on the profitability of the Star Sydney. And that comment in itself really caused the market reaction, because the market doesn't want to see any sort of legislation from the government that could have a significant adverse impact on the profitability. They also mention here, in this scenario, the Star intends to undertake an urgent review of the Star Sydney's operating model and assets. So again, it's very understandable just by looking at those 2 comments why the market has punished the Star Entertainment Group. Now, in saying all that, if things go better than expected for the Star, if these proposed changes don't come into effect, if in fact any changes that do come into effect are beneficial compared to what is proposed for the Star Entertainment Group, definitely the market is overreacting right now. And when the market does overreact to the high side and the downside, you can see the valuation of a company get quite attractive on the downside and quite overvalued to the upside. And right now, the Star Entertainment Group share price is at all-time lows. Not only that, the market cap of this company is at all-time lows as well. The share price down to $1.28.5 at the end of trading on February the 14th. The last time the share price almost got to this level, not quite, share price got down to about $1.50 during the COVID-19 financial panic. Back in 2018, start of 2018, share price of the Star reached a high of about $6.50. So the share price has fallen a lot. So the share price has fallen like 75, 80% since those highs back in 2018. So there's a definite possibility that the market is overreacting. But just based off those 2 bits of commentary we saw in that New South Wales casino rate section, I can definitely understand why the market is a little bit nervous around Star Entertainment Group right now. That's all I have for this video. Are you willing to take a position in Star Entertainment Group based off this possible overreaction from the market? Maybe it is not an overreaction, and maybe this is a real threat to the Star Entertainment Group moving forward, particularly in their Sydney operations. But they'll still have the Gold Coast Casino, the Brisbane Casino, and I'm pretty sure the Brisbane Casino will probably do pretty good business. Anyway, if you have any questions about the Star Entertainment Group, maybe you are a shareholder of this company and you've taken a position recently because the share price has dropped a lot, I'd love to hear your opinion. So leave your opinion in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.